Hello traders, it's Graham here from Kilted Trading. Hope you guys have all been well. It's been a busy week in the markets, very volatile week in the markets. So for this week, we're obviously back. I want to take you through, I guess, the systematic process that I apply to my trading. We're going to build on the last session we had where we looked at renko bars, and we're going to actually break it down from a very high time frame down to the lower time frames and show you how I trade the markets. And it is a bit of a lead on from another session from another trader that brought us to the same concept, who trades I guess very similar to myself with respect to the higher time frames, and looking to I guess form a bias based on I guess the time frame you're entering on. So without further ado, let's break it down. So I've got TradingView open here. As you can see, I've got 3 panels here, which I sort of quite like. A lot of people like 3 panels as well, sort of across horizontally. I've actually got 2 here, and I've got a bottom one, which is my renko bar, so I can bring that up. And I really normally start there. So with the renko bars, I find it's really good to sort of pinpoint the levels as we covered the last time. So this one we were actually looking at the Euro USD. So I've used the daily chart to look at supply and demand in terms of these areas that have been hit, and I have drawn those out. They're a little bit more pronounced as well when you go to the monthly chart here. So we'll just reset that one. So we can clearly see some levels where it's broken through the moving average here, which we're just coming back into, and we can see some key levels here which I've drawn. One thing I like to do is also put in where I've got supply and demand. I'll actually indicate what time frame, so that when I'm on the lower time frame charts, I can clearly see not only the zones that I have drawn, but from what time frame they're actually coming from. So the higher the time frame, the more attention you want to pay to those sort of levels. So that's what I've drawn in here: monthly supply, monthly demand, and I'm expecting that we'll come down maybe a little bit more, but we'll get to that, and we'll sort of tap into this little level down here. So that's what we've done with the renko. So I'll just flick that back to the daily, which is here. So that's interesting to see. When we even look at the renko bars, we kind of see that it's been sort of come down here, it's bounced up here, it's come down, then it's tapped this level again, then come right back down again. So it's been kind of ranging within these sort of levels. So you can see why I've drawn those sort of 2 zones. So that is the main levels that I want to draw in. So I then collapse that down so that's out of the way, and then I'll go to over here, I'll go to the monthly, and we can actually start to see what's actually going on the chart. So it's coming to an interesting level now, you can see, and this is all drawn from the renko bar, so you can see how it takes out all this noise and draws these levels quite clearly. So you can see here where it's in the prices sort of reacted off these levels. It's come into this sort of level, then bounced off, and then we're currently sort of ranging in here. Now the other thing I've drawn, which was on the other webinar we were on as well, Romy drew the down channel here, the downtrend. So we've clearly been in a downtrend, right? So if you've been trying to go long the Euro USD for the last year, you've probably had a bit of a hard time. The dollar index in recent months we've seen as being particularly strong. We're looking at Papa Powell potentially raising interest rates again. So it'll be interesting to see what happens at this level. But I would expect some price action or a bit of a bounce off this level. And what we are sort of looking for next week is a bit of reaction. So what I'll do is I will switch now to a weekly chart. So they've got the monthly on the right, the weekly on the left. So we can see here on the weekly, which is the sort of lower time frame, we've actually had a bit of a reaction to price already in this sort of zone. So it bounced off of here. You can see here in the oscillator, the awesome oscillator, this one down the bottom, that we're starting to see some divergence here. So the indicator has indicated that we've gone down again, but the price action has gone up. So what I tend to do then is I'll drop down to a lower time frame, and I sometimes keep this one up just for a perspective, and then I look for sort of little levels here. So you can see here a couple of things. So when we talk about patterns, we'll maybe talk about some patterns first as well, when we're looking at some of these time frames, to just pick up how we'd actually play these patterns if we were going to trade them. So you can see here there's been a big move down. Okay, so we're in a demand zone here, so we're looking for a bit of a reversal. Now if we were going to play this conservatively, what we'd be doing is basically saying, okay, I want to see if we're going for a reversal. What I typically try and do is actually build that in with a pattern. So when I say a pattern, I'd be looking for something like this, that would be a head and shoulders pattern. So we've got left shoulder, we've got the head here. We'd be looking for it to come up this level here, so touch this level, be something like this. Skinny shoulder be really nice, because then that means your stop loss is a little bit lower, and that's the sort of pattern we'd be looking for. So we'd be looking for price to do something like this. So there's a couple of ways we can play an inverse head and shoulders, which is a reversal pattern. We're looking to break this neckline. And when we say we want the price to break it, we want to break and close, which is very important. We want the price on a daily chart to close above what we call this neckline. I'll just draw that for you as well. So we talk about the neckline, we're talking about this level here. We're looking for this to be broken. So what we'll be looking for is, there's a couple of ways you can play it. Then you can basically take it on the break, or like this. So as soon as the price breaks this level, you're basically placing a buy order with your stop loss just underneath this right shoulder here. That's considered maybe more of an aggressive entry. I actually like taking those for a couple of reasons. One is it means you're not going to miss the up move, because sometimes it doesn't actually come back down and retest. It actually flies straight off, so you're always going to catch it. The other reason I like taking inverse head and shoulders is a lot of retail traders and beginning traders don't find this easy pattern to see. What I've found is a lot of traders will readily see and quickly see head and shoulders, but the inverse head and shoulder for some reason is a little bit more difficult for your beginner traders to identify. So I actually like taking more of the aggressive entry. The other entry to play is basically wait for it come back down to basically retest that level. Then what you're getting is you're looking for a price to then bounce off this level and then go long. Now the nice thing about that is when you get this retest, some people call it a lightning bolt, where it goes up here, comes back, retest, then whoosh, off we go, is you can place your stop sort of under the last sort of swing low under here. So it's a bit of a tighter stop. It's more of a conservative entry because sometimes what you might find is it can do this, right? It can go back down. So this way you're not getting that false move. You're basically waiting for the retest, you're being patient, and then getting in, which is a much safer way of doing it. That's the method that I would encourage you to practice, because it does sort of allows you to be patient, and that's a bit of a learning process. So that's the ideal setup. Wait for it to retest, then you're getting in. Now as far as take profits concerned, it's very straightforward, and I'll show you what I mean. It's basically what you're doing is you're taking from the head to the bottom. You basically measure that to the neckline, and then what you're doing is protracting that up to the level, and what I've drawn here is pretty much that would be your take profit. Okay, so we're in this level here, and interestingly, the reason I always do this is you want to see what it proofs. Now when I say proofs, you want to see the level it's actually been drawn into, and you can see here that was at the break of this level here, so there's a bit of supply here and it's come down. We're basically going back up to I guess tap into that zone, sort of right there where it's broken. So that for me looks like a good trade, but if I was trading that next week, that's what I'd be looking to do. And if I was trading it on the daily, that's the sort of move. Now you can see here, the other nice thing about this is I'm not breaking any sort of key levels here. So this downtrend, remember, is what we've drawn from the monthly. So I wouldn't be going any sort of higher than this as a take profit, which again is really important, because what we want to see is the levels drawn from the much higher time frames, right? So this is the downtrend. You can see here, even on this chart, it's respective. Come up here, down, come up, down. We've come up, you know, looking to almost sort of get through it or touch it, and then it's come right down here. So yeah, I would expect this to be respected, especially with the dollar index still looking relatively bullish in terms of its outlook. Now, what I spotted on this one, I actually like to trade the lower time frame. So we'll go down a little bit lower, and we'll spot a couple of things here as well. If we reset the chart. Now, what I've done here is on the 15-minute, I actually spotted, actually, I'll tell a lie, it was on the 4-hour. So let me get that chart up. Because remember, we're actually looking short. On the euro, my bias is actually short at the moment, obviously because of this sort of downtrend and the dollar index having been particularly strong. So although we've talked about a setup here, if I was going to take it, you know, I really don't have too much of a bias when I'm down in the lower time frames, like a 15-minute, 5-minute, but I'm still looking at the higher time frame. So this was a little setup that I've been looking at as well. So I'll just take this one off so we don't confuse the matter. So at euro, I'm still looking for the preferred trade would be short, right? So this is our monthly demand. As expected, we've had a bounce out of here, right? Could it go higher? Absolutely. We've got higher lows, higher highs, but notice it's come into a level here where it's stalled a little bit, okay? Bearing in mind we're on a 4-hour chart, and what we're saying here is that this could be a little sort of double top. So double top means that prices come up. See the two fractals here? These are fractals where prices hit it, and the way we trade it, I've just boxed out. So this is the sort of zone we've bounced in. We've tapped it twice, and then basically what we're doing is we've drawn a line here or boxed it out. Now it's actually dropped below here, so that would be your sort of entry. Again, you can play it fairly safe on the double top, so you can basically play it where it breaks. You can take the trade, or you can wait till it sort of breaks, comes back up, retest. Now in this case, it's actually come up and it's actually tapping back in, which I quite like, and then we're looking for to do something like that. So again, what we're doing is it's generally a 1-to-1 trade, your double tops, when you're on the sort of lower time frame. But what I like to do also, if I'm looking at these sort of levels, especially on a 4-hour chart, what I'll do is I'll actually go down to, in this case, a 15-minute chart. And what I'll do is I'll see what the price action is doing on the lower time frame to get effectively a better entry, right? So again, you can see I've gone from a 4-hour chart right down to a 15-minute chart to sharpen up the entries. So you can see here, this is just really nice. So you've got your topping, you're sort of topping out here, and the zone is come back down, come back up, it's come down, your candle here which is probably shown on the 4 hours, probably around about this level. But see how it's come down, retested. It's almost, you could argue this is also a flag pattern on the lower time frame, which would be something like, let me get a trend line up for you, which is sort of here. So you can see here it's come down, it's pulled back, and pretty much what we're looking for, if I was going to take this trade next week, I'd be looking for, I'd play it fairly conservative, and I'd be looking for a break of this fractal here. So the way I'd play it is I would take my, so this is our sort of double top pattern. We'll just measure that again. Take our price range, we'll measure it from sort of top to bottom, and we'll protract that down. We'd be looking for you'd actually take it on a, you could actually take it on a break of that fractal would be where I'd be entering. So I'll just draw that out for you guys as well. Short position would be, I would take it on a break of that fractal, and I would be placing my stop on here because I'm on the lower time frame. I'd be having my stop above that fractal, and I'd be taking my take profit, which would be down here. So that in this case, you can see why it's actually quite nice to drop down to the lower time frame. You can get a really sharp entry. You can get a sensible stop, which limits your risk. I'd only be taking 1% risk on this one. And I'd be looking at, where is this proofing to? Well, that's proofing out to a really nice level, because look here, it's sort of come up, touched that, come down, and then broken through. So there's something in here in terms of a level, and it's proofing straight to that level. You cannot tell me the markets aren't random with these patterns. They do work, but as you can see, it is a process, and I've started everything off a monthly chart, right, and I've broken it down. So here's a little trade setup for next week, one to keep your eye on, and there's also a inverse head and shoulders setting up as well on, I think that was, we had the 4 hour chart where that was setting up. Would be something to look for as well. But look, I'm fancying this sort of down move here, just basically to either to tap into this level to go long, or indeed, if we look at the monthly, if we go back to the monthly, it's a little bit scary actually. If we go here, we've actually got a double top. Look at this, folks. So here, and it's, although you're going to buy intraday, but look at this. We've come down here. I mean, it's taken 12 months, as Romy pointed out, to come down from here, which was, effectively December or January last year. It's 12 months. It's just gone straight down. Look at that. But also what we have is, if it breaks this level here, this monthly demand, which it could well do in the next a week or so, especially if we get a nice healthy bounce up on the dollar index again, the US dollar, then we're looking at a double top. Now, how does that play out? Now, I've drawn the lines here. You've got basically from here, this is the level, right? It's going to go here. And where does that take us? I mean, that proofs right into this level here, which is the all-time sort of lows. So that can happen, guys. We're certainly seeing this weakness continue, although we've got some divergence here, which you would expect. You would expect after this 12 months some sort of pullback. But on the longer time frame, there's a double top, guys. That is it's plain to see, double top. We've gone sideways. It's topped out here. We've come down, tapped this. If we're breaking this level, we're coming all the way down here. So so that is, we've got a double top there. Obviously the double bottom, let's see if we can actually see any sort of double bottoms on this chart. Well, that's maybe a bit, let's get the daily chart up, we can see if we've got any double bottoms that we can point out. Probably won't be too many of those on this chart. Let's see if we've got any. You're really looking for where the fractals form. There's going to be a lot of double. Well, there's a double bottom there, but it's broken, so we'll just box that off. So double bottom, period of consolidation. That's really where you're seeing things bottom out. Break of this, and off we went. Does it proof out? Let's see. It looks as if it does quite well. So top to bottom, or bottom to top, and it's proofed out. Pretty well. That'd be a winning trade. Albeit against the prevailing trend, but they do happen, and that's what to look out for. So you're looking, it's generally a 1-to-1. Your stop is sort of down here, and your take profit, you just sort of scale it out or proof it out the way I've done. Let's see if we've got any head and shoulders there. Usually quite easy to spot. Let's see if we see any good ones. Obvious ones, and we can show you how those are done. What you're looking for with the head and shoulders is when you have a skinny right shoulder, that's always good, because then your stop loss can be quite tight. Let's see. Oh, it's not a great one. Let's see if we can get a good one. Go back a bit. I like to. So that's not. It's also the same. You're looking for one. You can never find a very good one. Let's go back a bit. There's a few here, but they're a little bit ugly. I want to see some that's a little bit more obvious for you guys, so that when you see it in a chart, you just see it and you trade it. This one's not bad. So what you're looking at is when it sort of bottoms out. Let's draw it. Let's see how. So you've got sort of price come up here, left shoulder. You've come up here. Now the other thing I'll say that you're always looking for, which is gold. And if you take anything away from this sort of learning, is this: when you are looking for patterns and you see a pattern on a lower time frame that is supporting of the longer term trend, in this case down, this is a Euro USD, this is on a daily chart, right? So it's a no nonsense chart, right? I'm always going to take these reversing patterns when we see them on a time frame with confluence with a higher time frame. So you can see here we've got a head and shoulders here, a head and shoulders pattern. We was trying to reverse, didn't, got the head and shoulders break here. I'm in, because we're supporting the longer term trend, which is down. So the way we trade this is we place a stop. That'll be the candle you get in on a daily, because that's the one that's when it's closed below. So I'd be placing a sell stop under here. I would be placing my stop loss here, and my take profit would be, let me just draw that for you guys. My take profit would be, it's always from the neckline, is would be down here. Okay, and I'd be looking, obviously these candles wouldn't have formed at the time, but we'd see this sort of trend here, and we'd be looking left, and yeah, it's proofing into quite a nice level where we've had a bit of demand here and it's zoomed up. So that would be, a reasonable place for a take profit. But you can see here it's just, it's actually come back and it's continued on. So well, when we say continued on, guys, it's kind of went a long way, hasn't it? So this is where you want to be managing your trade. Would you trail it? Well, look, it's come right back up here. Tested it again, tested this level, and then came down. So again, back to what I said earlier. If you want to take a conservative entry, you can wait until it actually comes back up, retests it. That, my friends, is when you score the winners. Why? Because your stop would have been up here, versus when you take this one, your stop's quite far away. So with patience, you get the payoff always in trading. When you're patient, that is the secret sauce. In this case, I would have got in here because the prevailing trend was down, but I would have, if I was more patient, got a much better entry, because once you see this and you got in, even on a break of this sort of level here, after it's bounced off this retest, your stop loss just needs to be up here, really, and then you can take this short with a fair amount of confidence. So that's it for this week, guys. We've covered how we break our trade down from a monthly to a weekly to a daily to a 4-hour to then to spot something on a 15-minute chart that interests you. You're going to get high probability setups when you always take those patterns in line with the higher time frame trend. So that's a key takeaway, and we've showed you head and shoulders, inverse head and shoulders, double tops and double bottoms, where to set your take profit, where to set a sensible stop loss. So until next time, hope you guys have a great week trading, and as I always say, look after yourselves, look after your family, and have a great week trading. Thanks a lot, guys.